All right, everyone. So today we're going to be talking about scaling in, scaling out risk management, okay, which is something that I think is very, very, very important for everyone to know. I have a process of how I get into contracts, but it varies sometimes. And I want you to also be able to have a plan for yourself of how you're going to get in and out of your contracts. So I'm really good with my math on however many contracts I purchase and how much I spend on them so that I know how I can end my day green or my week green for the most part, right? You're going to have some red days. And so what I did, hopefully everyone can see my screen. Can I get a 5 on the floor or the chat if you can see this dynamic compound tool, please? So everyone can see this tool. All right, perfect. Now I'm going to play around with this tool so that you all can see what it does because I created this and hopefully it's beneficial to you all. And also if you have any ideas that we can use this for to make it a lot better, please feel free to let me know that as well, okay? So I'm just going to walk you through how you're going to do this. So let's just say you were to purchase 10 contracts of something, and let's say those contracts cost you $50 each, right? And of that, 10 times 50 is going to show you your total cost over here. So that means you spent $500 on those contracts. But you decided that today I just need an extra $300, right? Let's just say that that's your profit goal. You need an extra $300. What this tool is going to do is it's going to reflect however many contracts you've purchased. It's going to give you a scale step, 1 through 10. Obviously, you have 10 contracts, so it's going to give you 10 lines. And it's literally going to tell you how much you need that amount to get to before you sell your first contract. Now, what I did with this particular tool is I came over here and I put in a a field where you cannot edit it, and I'm going to talk to you about why. And I only did 30 and 50. You guys know I do 30, 50, 70, 100% and runners. I'm supposed to be in do not disturb. Please forgive my disturbance there, if you could hear that. But it's stuck at 30 and 50% for a reason. And the reason why I have it to where you cannot update this field in this one is because in my mind, how I teach you all the time is when we get to 30%, that is a very big target. If I could get you to think of it like this, your savings account is not going to give you probably 3% in a year, okay? You're getting 30% in a day. So I need you all to know that is a very big win. At 30%, actually, let me start here. When you first enter into your contract, okay? When you first get into your contract, you are in the risk zone, very high risk zone, right? If you pay $100 to get into that contract, you need to have a 20 to 30% stop because you do not want to lose your entire um, investment, right? So if you have a 20% stop and you put in $100, then that means if it pulls back to 80, right? Now you only have $80, it should take you out of that trade. Also, I want you to know that if you're utilizing a stop losses are not 100% accurate. The reason why is because these systems are computing and they're speaking to each other. And the market sometimes is very volatile. It can jump several cents, several dollars, several tens of dollars, right? Just depending on what you're trading. And those systems have to catch it. They have to catch where that price is exactly at that moment in order to stop you out. And the moment that it catches, maybe there's a 5 second delay, 10 second delay, whatever, wherever it is, when it computes that, it's where it'll stop you out at. So if you have a 20% stop, you might not get stopped out until it gets to 25. You might not get stopped out until it gets to 30. So I want you to know stop losses are not 100% accurate. Okay. It's funny because I feel like trailing stops are. They want to take more from you than they give, if that makes sense. So, with that being the case, everyone, when you first go into the trade, you should be putting your stop loss in there. That's to protect your investment, okay? But also watch the chart because you may need to edit. If it's creating market structure and you see it making structure, but you have this 20%, you might need to say, I might want to wait. It just depends. It's not always going to be a cookie cutter situation. You may have to adjust according to what the chart is telling you, which is why you should always be watching the chart. So again, you are in, You have $100 in there, you have a 20% stop or 30% stop, which means it's going to stop you out. If it gets to $80 in there or $70 in there, it's going to stop you out, right? That's when you first go in. As you move into profit, this is where you have the conversation with yourself like this. Now I'm moving into profit. You don't want to go in like you're 5% in profit. That's not a lot, right? That's not enough. That's not significant enough. But when you get to like 30%, that's where you start to scale out, right? You think the screen froze? It's nothing going on the screen. I'm not moving. I'm not doing anything. And so when you get into profit, so 30% is decent enough profit, okay? You can adjust it however you see fit. Maybe you feel like that's not enough. But for me, my first profit taken, and this is a guide, this is not like concrete set in stone what you have to do. This is a guide to teach you how to move, right? 30% is my first profit taking. That's where I'm starting to take some of my profit off of the table. The reason why is because I want to start accumulating some money. Okay. And at that point, I have two options, everyone. I can do a trailing stop that will take me out of the trade. So if I'm at 30%, I can do a trailing stop for like if it takes away 5% of my profit or 10% of my profit or even half of that, 15% of the rest of what I have in, okay? At that particular point, I could say I'm gonna do a trailing stop for a particular amount, less than 30%, or I'll keep my original stop. Or actually you have three things that you can do. You can do the trailing stop, you can do break even. I do break even a lot, y'all. I do break even when I'm at 30 a lot. Okay. Because that means to me, well, I walked away with 30% and I didn't lose anything, right? I do that a lot. It just depends on what my patience level is for the day. Or I'll say, I'm a big girl. I know that I'm going to lose some in this game. Like maybe I lose 5%, 10% of my actual investment. You know what I'm saying? But that's a big reversal from 30 to allow yourself to go into negative. So rarely do I ever do that. Okay. Unless it's like I'm spending pennies on something and it's not that expensive, right? But these are going to be your options. Okay. Now, once you get to 50%, you are in a beautiful spot because at 50%, you're half of what your investment is. You've made 50% profit and you've already taken some off the table. So now you have more in there and you've made more profit and now you can adjust. So if your trailing stop is manual, like in Webull where we're finessing it, you got to do that manually. But then in Thinkorswim, it actually has a designated percentage that trails the profit. That's why it's called a trailing stop. So you can designate 5%. So it's constantly trailing you higher and higher and higher unless it pulls back 5% or unless it pulls back whatever designated percentage you put in there. Okay. That's how your trailing stops is supposed to work. Webull hasn't caught up yet for whatever reason, and Robinhood hasn't either, from my understanding. Okay. When you get to 50%, everyone, 50% is that place where now you have made a pretty decent amount. Okay. You then, if you have to manually do it, take me out if it pulls me back all the way to 30%. Because now you've reached your second profit taken. You take profit at 30, you take profit at 50, you reached your second profit taking. Now you're adjusting your trailing if you have to. And for me, what I like to do is now I'm going to adjust my trailing to where if I get back to only 30% profit on what's remaining after I've taken 50, take me out. Right? And I'm giving you a guide, right? Because, I might do that and I might say, well, take me out of a majority of them, but leave like a few of them in there just in case. You see what I'm saying? So 30% and 50%. In this particular tool that I created for you all, I have it stuck on 30 and 50. These other numbers are going to do whatever they want to do, depending on however many contracts you buy. The reason why I have it stuck on 30 and 50 is because I want you to at least take profit there. I want you to at least take profit there and then write it out for whatever else, but never let it go. Once you get deep in profit, do not let it completely reverse on you. And this is also paying attention to your profit, but paying attention to your charting platform as well. Is this making sense, everyone? This is exactly what you need. Listen, let me tell you, my voice is gone. I'm struggling here. I said, oh Lord, how am I going to do this class? Because I've been talking for the past 2 hours And then I had to come back on here, and I've been sitting here working on this all day, like, oh Lord, this field is not right. It's calculating the wrong thing. I'm getting stressed. I'm getting hot. And then I literally just ate about 30 minutes ago for the first time today. So I've been working on this because this is it's I need y'all to get this. Cause yeah, we can't be letting stuff reverse on us. So now, everyone, the beauty of this particular sheet, okay, is it's going to literally walk you through how you should take profit. It's also going to tell you the price that the contract needs to be at when you sell it, okay? So if it costs you $50, it's like, hey, once it gets to 71, the cents might be off because most contracts ain't really going to show you pennies like that. You know what I'm saying? But it's close enough, y'all. It's close enough, okay? So the great thing about this field, this sheet is that I think I did maybe 200. I can't remember the amount. Like I said, I've been working on this all day. But like if you were someone that just bought 3 contracts, okay, and let's say those contracts cost you $20 a piece, and now your total that you spent on this thing is $60. So you spent 60, and let's say you just want $30. No, matter of fact, let's just say you want $40, okay? This is what it's telling you. It's saying, hey, you got to take some because Kay made this sheet. She said, I got to take profit at 30%. That means once this thing goes from $20 to 26, I need to take off my first contract. Once it goes from $26 to $30, I need to take off my second one. And then if I'm trying to get, what did I say, $40? If I'm trying to get $40, right, I need to take off when we get to, you see what I'm saying? I don't forgot where I am, y'all. I'm spinning over here. Okay, it's gonna get you close enough. Like I'm noticing the level of inaccuracy, like the slight inaccuracy. But like I said, I'm still testing with this sheet and I'm still trying to perfect it because it's saying 90% to your goal. So it's gonna be kind of hard because if I get 3 contracts, if I only have 3, and that's the reason why there's a slight margin of error, but it's beautiful even with that slight margin of error, right? The reason why is because I'm making you take 30% and 50%. So your third one is like trying to figure out where you need to be to get you as close enough to that goal, right? So it's going to adjust itself depending on the amount of contracts that you buy, and you get to put in your goal for the day. So if you wake up tomorrow and you say to yourself, which you should always have this conversation with yourself, today, what do I want to spend? It's you budget for the market, like you budget for your groceries, right? You say today, I got $500 for this market. I don't have no time to play. It's a Monday. I hate trading on Mondays. Okay, you have $500. So now you have something that's going to cost you, I don't know, $50 a contract, right? So that means you could buy 10, right? $50, right? So now you're at $500 a contract, and you say, all I really want today is $250 from the market. That's a good day for me. I made 50%. You put that in here and it's breaking down how you need to take profit. Okay. It's literally breaking down how you need to take your profit. You need to take it when it gets to 60. Okay. You need to take it when it gets to 75. You need to take it when it gets to 63. Or you can look at this part. If you're not looking at the exact number, you can look at the percentage that it needs to be at when you're taking your profit. Okay. I need to take my first contract out at 30. I need to take my next one out at 50. And then why is it doing that? See, I'm noticing the margin of a little bit of error here. It should be correcting this, but you guys are hopefully you're getting the point, okay? The value, I guess it's basically showing the value of one needs to be at 60, the third one needs to be at 63, 64, as opposed to paying attention to this. The third one needs to be at 63, 64. So that's where I said I'm still working on this sheet, but y'all, once I get done with it, and I can give it to you now, if you're understanding that slight margin of error. But I'm really, really working on trying to make sure that everyone is paying attention to scaling in and scaling out. Now, the other thing that I wanted to talk to you all about is this. When you scale in and out of trades, I want you to think of a pyramid, okay? Matter of fact, let me pull this up. So I put together a little some little shum. Pull this up. This is, yeah. Yep, this is my thing. Just making sure that it's right. 50, okay. And let me see what you all are saying real quick. Yes, I'm recording this. I've been playing around with like trying to make sure that I get some stuff together for y'all. Okay, so I'm gonna give you guys an example of what I mean by that. I have something here, if you will, pull it up in ChatGPT. All right, so when I talk about scaling out like a pyramid, this is what I mean, right? I'm always talking to you all about 30, 50, 70, 100% runners. So I did this based on having 10 contracts. So essentially, wait, let me see. Yep, I did it on 10 contracts. So if I bought 10 contracts at $100 a contract, if I sold four at 30%, sold two at roughly 51, that's in that 50 range, right? Sold three at 70, and then one at 100%. And let's say I had no runners, but I always teach you if you have enough for runners, let the runners run, baby. Let them run. Okay. If you did this and you bought 10 contracts at $100, your profit would be 510. And I can't give you 10 million variations or an infinite amount of variations of this. And when I say I can't give you an infinite amount of variations, what if you buy 25 contracts? You know what I'm saying? Or what if you buy 1,000 contracts? I can't give you those many variations, but I'm trying to show you that you're going to walk away with something. Okay. The only way that you may not walk away with something is if the trade is a dud, if it reverses against you, if it's a flop, if it, you know what I'm saying, if it stops you out. But that's a part of the game. A part of the game is you're going to get stopped out of something. You're going to, but you're not supposed to have an account of $1,000 and put $1,000 into a trade. You have $1,000. You put 20 to 30% of that into a trade, right? And when I say an account of $1,000, I'm saying that's all you allocate towards options. Because if your account is $1,000, you need to be allocating, let me not say need, that sounds a little harsh. You should be allocating some of that to investing in long-term positions like shares, right? Something that's going to grow. And of that amount, you have a percentage that you put towards options. That percentage then gets broken down some more into what percentage of that are you going to allocate towards trading options. So let's say the percentage of that you allocate towards options is $1,000. Okay. Of that, 30%. Now you got $300. That's your range. Your range needs to be, hey, I can afford $300. Okay. I need to find something that's in my range, something that I can afford, and something that I can afford to scale in and out of. If you can't afford to buy multiple, you really shouldn't buy any. So what's your alternative? A lot of people think that you have to go and trade NDX or SPX to make money. No. Y'all, I had a trade. I wonder if Maria's on here. I had a trade one time and I think it was on XOM and those contracts cost us pennies. They was like $8 or something. And they went to a few $100s a contract. But guess what? That same $300 that I might use to buy one contract of this, I could break that down into something that probably cost me $20, buy multiple, and put myself in a position to where I can scale in and scale out. Um, Scaling into contracts looks a little bit differently. Like when the rule is 20 to 30%. So you want to make sure that it's profitable, it's moving in the right direction with strength before you start to buy more contracts. Don't just buy contracts. Don't just add just to be adding. You know what I'm saying? Don't just add just to be buying stuff because when you're scaling in to contracts, let it get to 20% and then maybe say I'll buy another one. You know what I'm saying? I'll add in some more. I'll add in some more. Like that. That's scaling in. That's buying more contracts. The opposite side of that is averaging down. And I want to make sure that everyone knows that when you're averaging down in a contract, you need to have the most conviction in the world that it's just a pullback because you can average down and increase your losses. Do not do that, okay? I rarely ever average down. It has to be like a very, very good reason because I don't want to contribute to something that is already losing, if that makes sense. Before I proceed, does anyone have any questions? You watched it happen with Disney from 8 to 150, right? You know what I'm saying? Y'all, on my birthday this year, which is May 15th, I posted something on my Instagram page, and that contract, oh, that contract was so cheap. It was under $100, and they went a few thousand dollars. A few thousand dollars. I'm so serious. Go look on my Instagram page. Don't average down because, yeah, don't just average down because you're down. Thank you, Simon, because you could be contributing to a bigger loss. It costs money to average down. It costs you more money to add to a losing position. Does that make sense? So now you just added more. So you need to be like, I know that this is just a pullback. You know what I'm saying? Like then you average down. And how do we know that something is reversing? Y'all, the indicators are there for a reason. There are some people who might say, I don't need to use indicators. That's great. I'm happy for you. There are some people who say, I do need to use indicators. That's great. I'm happy for you. It's subjective to the trader and whatever keeps you safe. There is no right or wrong way. Okay. Just make sure that you're not crowding your chart with a bunch of things that speak the same language, if that makes sense. Okay. Thank you so much. I'm happy it's making sense to you. So, yes, this is being recorded. This is being recorded, everyone. Okay. Now, everyone, I need you all to focus on this particular rule. All right. Which is why I did want to do this over Zoom today. And I'm so sorry, you guys. My voice is really leaving me, and I'm struggling so hard. I have so much that I want to talk about, but Lord, I feel like I'm not gonna have a voice for live trader, and now we don't want that. So with this particular sheet, like I said, you can come over here. I tried to create it. It took me so long because I'm not the best with this type of stuff, but I had a brain, that I had a thought in my brain. It was like, you know what, let's figure out a way to get everybody on board. And this is what I came up with, okay? So what I want you to do is you wake up in the morning. If I call out a trade and I say, all right, y'all, I'm getting into Amazon and Amazon cost me $64, right? The cost of the contract is $64. And you say, all right, well, shoot, I could buy 8 of those contracts, right? And you figure out what of that amount I'm spending 512. Am I trying to get 100% of this thing? Because if you are, that's okay too, right? If you're trying to get 100 and if you're trying to get 100% of that, what is that? 1,024. But math sometimes don't be mathing, y'all. I hope it's mathing. Wait a minute. Do 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 do. Yep, I think that's right. So if that's what you're trying to get, it's gonna break it down. 8 contracts, steps, scale steps 1 through 8. You locked in at 30 and 50. You can't change that unless you create this sheet on your own. Okay. And if you create it, just give you a little cred. But this is what it's gonna say to you. It's gonna say, okay, this is how you need to take your profit because you have 8, and we're trying to make sure that they're weighted consistently. So now you're gonna have to start scaling out at this particular at these goals, right? Are we good? How y'all feel about this? I'm trying to look for margins of error. That's the only other thing. But I did realize what it does on the well, it's looking different now, possibly because it's more than just 3. When it was 3, it was like unequally balanced out, I feel. Let me view what you guys are saying. Send it to y'all now. Send it to you now. Okay. I'm happy that is great. Now, remember the pyramid, like I said, when you're adding, when you're going into contracts, you add like a pyramid, right? You add like a pyramid. Oh, I'm sorry. When you're scaling, when you're scaling into contracts, everyone, when you're scaling into contracts, you scale in like a pyramid. Your heaviest that you want to go in comes first, and then you start to add from there. Okay, so always remember the pyramid. When you're taking profit, it's the same thing. But it doesn't have to be. Like I said, this is a guide. This isn't like concrete. But generally, you're scaling out that way. Like you're taking a majority at, believe it or not, you're taking a majority at 30%. And then you're lowering your position size, right? Because there's no guarantee that you will get to 100%. It's no guarantee that you will get to 30%, honestly, okay? But you're scaling out heavier because you don't sell into strength, not weakness, is what I always say, right? Now, when I also tell everyone, I need you all to focus on this too. Because I noticed that on the calls when I'm talking, I'm constantly telling you what I see. And I'm saying and this is me. I've always told you my 30, 50, 70, 100% runner's rule. I've always said that, but I think you guys needed this visual because Lord. So with that being the case, what if we only got to 25%? And I'm on the chart and I'm saying, whoo, y'all, this is an area where we could reverse from here. This is an area. I'm not trying to scare you by any means. I'm trying to equip you. I'm trying to help you to make the best decision for you because I can't push the button for you. And you have to sit there and be an adult and say to yourself, well, man, I'm in profit right now, but if Kay is saying this is a great place for it to reverse, this is a key pivot area. When I say key pivot, I mean an area where it could pivot, turn around, right? If I'm saying that to you, it's up to you to make that decision. And you have to go to what you have in there and say, well, is 25% good enough for me? Am I going to be salty if this thing go to 200%, right? Or maybe I need to scale out, or maybe I need to come up with a plan. Y'all, this is my plan. And I'm giving it to you so that you know how I trade. This is my plan based on where I've gotten my account to. But your plan might vary a little bit. You might say, believe it or not, my uncle, I was talking to him and he laid out a plan that was like mind blowing to me. He said, if I could just get 1%. And when he showed it to me, it took a lot of time. But when he was like, I'm just compounding 1%, 1%, 1%. And when he showed me how quickly he could get to $500,000, I was like, wow, you have to sit with stuff like this and figure out like what your plan is to get you to your goal. I'm here to help you, to guide you, to teach you, to show you like what you can do. I can't do everything for you. If y'all asking me for his plan, if y'all asking me for his plan, then you know what I'm saying? Just you know, but there's so many things that you can do. Amanda said 100%. So also with that being the case, everyone, when you take this particular sheet, utilize it as a tool, but I'm going to beg of you, I'm going to ask you all to please, 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 and I know this is not why we're here, please learn candlestick patterns. Please learn candlestick patterns. I need you all to be able to disagree with me. Is that fair? I need you all to say, okay, you might have missed this because sometimes I might miss stuff. To be honest with you, I took a loss on, I think it was like a 23% loss on something. Um, I'm trying to remember what it was. Nope, it was more than 23%, to be honest with you. I took a loss on something here recently. And y'all, when I moved over, because I go back and I try to rewatch like any great ball player or sports player or whatever, they go back and try to watch what they did wrong, rewind the tape. Hey, you ain't got to remind me, Beth. But I went back and rewound the tape and I looked and I said, dang it, that was a bullish area. That was a bullish crossover. How did I miss that? And it was right there in my face. And as soon as I popped that chart out, I said, that's the reason why. So I'm saying this in full transparency. Just like your favorite player is going to have an off day, I might have an off day. Is that fair? Is that fair, y'all? So I want you to be able to say, Kay taught me this. I need to see this chart for what it is myself so I can make the best decision for me. I don't like what you see on this chart, Kay. I'm gonna hold off on this one. I need you to do that, right? And the other part of that is a lot of trading is 80% psychology, is 20% strategy. I know strategy backwards and forwards, but I'm human and I might have a day where I'm arguing with somebody or fighting with somebody or I ain't getting no sleep. You know what I'm saying? And so maybe my mentality is not there. And I need you to be able to say, I see this on this chart and I agree or I don't agree. Okay. So, anyways, we're going back to this. I'm seeing people hop on here late. I ain't gonna call y'all out, but I am gonna send this to you all. Okay. I'm gonna send it to you all. I was trying to transfer it over into a different thing because I don't know if this will. Matter of fact, I'm just gonna remove all of this. Okay. So I'm gonna remove this, And I have it set to where the heavier gains are towards the top as opposed to the bottom, meaning that you are not waiting for a large amount on the top, you're waiting for towards the bottom. But I even believe that I set it so that you can adjust even that as well. Um, Change the screen. Yeah, I'm talking about this sheet again, right? So hopefully this is beneficial to you all, okay? We're going to scale in like a pyramid. We're going to scale out like a pyramid, heavier on the bottom than it is on the top. Just keep that in your mind like a pyramid. You're going to take your profit. So let's go over it again, everybody, so that we are very clear on what we're doing. When we first get in, this is stop loss territory. Stop loss. Stop me from losing everything. That's basically what a stop loss is. Although it's not 100% accurate because of volatility, it's going to stop you out as close to what you designate as possible, depending on the volatility at that time. Okay. So you could suffer a greater loss with the stop losses. Okay. So I just want you to know that when you first go in, stop loss. What's your stop loss? Okay. You buy $1,000 worth of contracts, you only want to lose 20%, you are negative $200. Stop me out because I don't want to lose no more. That's what that's for, okay? Once you are in to profit at 30%, if it can get you all the way there, you're still supposed to be watching the chart because sometimes it may just want to give you 20%, right? That's still a win. It's more than what you had, right? But at 30%, that's where our first goal is. That's what we're aiming for. We're aiming for 30%. Once we get to 30%, we take profit off of the table. We are buying multiple contracts, so we're taking some profit off of the table, okay? Once we get to 50%, we are now adjusting our trailing stop. Our trailing stop is to keep us in profit. So remember at 30%, you can set once you get to 30%, you can set your trailing stop for a lower percentage, 5%, 10%. So if it pulls back 10% of your profit, take me out, right? Or you can set it for break even. If it takes me back to what I paid to get in, take me out. Then I suffer no loss and I made profit. Or you can do a small loss, right? Those are your options once you are at 30%. When you get to 50%, you are adjusting if you have to manually adjust your stop losses, okay? Just making sure I'm running through this again. You are adjusting once you get to 50%. If you're going to utilize this sheet is going to do the work for you. Okay. It's going to tell you how you need to get out of your contracts. You buy 5 contracts. And I'm going through this again just to make sure we bring it on home. You buy 5 contracts. Those contracts cost you $100. You spend $500 on them. You want to make 100% profit. So let's just say your goal is $500. You want to make $500. Okay. This is how it's going to get you as close to this as possible, right? Because you're buying 5 contracts, so it's going to have to pull you out because I set these values stuck at 30 and 50. It's going to tell you how you need to sell your contract. You're going to sell your first one when it gets to 130. Once the value gets to 150, you're going to sell your second one. Once the value gets to 200, you're going to sell your third one. Once it gets to 233, you're going to sell your fourth one. Once it gets to 266, 67, you're going to sell your last contract. It's going to get you as close to your goal as possible. This thing is going to work as best as it can. I am going to send it to you because I see that it's getting pretty, it's very accurate. It's as close as I think it's going to get, right? And so now the work is done for you. Okay, everyone? We good? So if this was your goal over here, $500, it's telling you, hey, you need to sell one at 30%, sell your second one at 50%, sell your third one if it gets to 100%, sell your fourth one at 133, sell your fifth one at 166, okay? Do y'all have any questions for me? I'm going to take you all off of mute. All right, you all are off of mute. Do, do, do. I do not bite. Maybe I do. I don't know. So this is a great time for you. What is all of that? This is a great time for you all to ask me whatever questions that you have. If you don't have any questions, you all, we literally can log off 40 minutes into it. Hey, Shay. Uh-oh. I'm happy that it's helping y'all. I promise. What was the price per contract? What do you mean? Your main issue with stop loss is using limit sell. Stop sell. Never works. Limit sell. Stop sell. I'm trying to figure out what you're saying. Limit sell, stop sell. Sell B6. Right here. Contract cost. 5 contracts at $100. You put in what you want to make right here, right? Oh, only market stop because that's going to stop you out at whatever the market price is right there. Your stop, you have to figure out like you got to put a percentage in. Webull will allow you, Webull has a quick button where you can just push 10%, or you could just push 20%, or you could just push 30%, and it'll be like, hey, I'll stop you out at this amount. Now, the other thing is if you don't attach that order originally, right? So I'm happy you said that to me. If you don't attach your order originally, right? And you wait until, so you put in $100 and then you don't attach that order originally, and now it's at 80, it's worth $80. And then you go in and put, I want a 20% loss. Now it's going to stop you at, what is that, at 64? Is that math right? Yeah. It's going to stop you out at 64. So I want you to know like it's going to stop you based on where it currently is and when you put it in there. So remember that. Everybody's stop loss is unreliable. I I I don't know if you were on here when I said that everyone's stop loss, the stop losses are, they are reliable, but volatility. It's like um I don't know. I don't know. I'm trying to think. Y'all know I like to use examples. All right, so let me say it like this. Let's just say I'm gonna read your message. Just hold on. Let's just say there's a computer that is talking to another computer, right? Okay. And they're talking back and forth to each other, but it takes 15 seconds for it to transmit the data between the two. Second number one, your contract is at $100. Second number two, your contract, and you set a stop loss. Second number two, your contract is at second number, let's say 10. Now it's at 90, right? 10 seconds in. And then on that 15 seconds, your contract is worth 75. But you put in that you want a 20% stop loss, right? Because it's taking so long for them to catch where the price currently is saying, okay, when I finally get that data, it's around where she wanted to get out or he wanted to get out at, even though it's slightly lower, stop her out or stop him out. That's when I say volatility, because these systems are communicating with each other, but price is constantly moving. It's constantly like changing up and down, changing up and down, changing up and down. There's sometimes where your stop should hit, and thank God it didn't, because it reversed back in your favor because that computer didn't communicate to it just yet. That happens too, y'all. Sometimes it's like, thank God it didn't stop me out. It was supposed to. Oh my God, it did stop me out because the computers haven't communicated with each other yet. Does that make sense? Okay. All right. Kindly asking, what does mean average 0.90? What does average point? So whenever I do that, I'm telling you, and it's a great question, Brenda, whenever I put average point, whatever number, I'm telling you how much I paid to get in. And the reason why I'm telling you how much I paid to get in is because if I tell you I paid $100 to get in, I'm using 100 because I feel like that's the easiest thing. If I say my average cost that I purchased my contract at is $100, and you are at work and you come in and you say, "Oh shoot, she put out a trade idea and she put it on this ticker," and I go buy that and you go buy that same strike price, and now the contract is $175. And I'm saying, I'm up 75%, y'all. And you like, how are you up 75%? And I ain't made nothing yet. Well, it's because you got in late. So I'm telling you because I'm going to tell you how much I'm up because I'm letting you know so you can follow along. So if it's super far off from where I got in at and you're getting in late and I'm announcing profit and you ain't made no profit yet, you're gonna be confused. So I'm letting you know that to be like, hey, this is what I paid. And then by that way, you can also know, like you're riding the wave with me. You can also know when I'm down, you can know when I'm up. You see what I'm saying? Uh, I should use a trail stop. I just don't end up watching my contracts. A trailing stop is to keep you in profit. That's going to keep you in profit. So a trailing stop basically means, hey, trail my profit and only take me out. You can designate whatever you want it to do depending on the brokerage. So you can say, hey, if I'm up $500, right? I'm profit $500. Take me out if it pulls back to 450. I'm still walking away with $450 profit, but it took $50 away from me because I'm trying to trail it to see if it's going to take me from 500 to 600 or whatever. That's what a trailing stop is. A trailing stop keeps you in profit. Um, okay. Next question. Y'all can come off of mute, I think. When I start yapping, it puts you back on mute. Okay. Okay, for the next class, can we go over charting on different time frames? I see charting homework, but starting to struggle in some areas trying to chart on the 4 hour and draw trend lines in key areas. I did watch your scouting for swings and we can do that right now. I can do that really quickly. And we can go in depth or later, but I can do that real
It
quick.
sounded weird.
What's sounding weird?
Hello? Oh, you can hear me?
Yeah, I can hear you.
Oh, no. Okay, there you go. It's clear now. There you go.
Okay. Let me see what else you got. Slippage is pretty large. Robinhood stop loss is unreliable. I read that. If I have a small account new to this, I should be selling at 30%. Yes. Thank you, Kelly. That was a great question. If you are new to trading, Kelly, are you still on here? I'm gonna mute all
Yes,
you.
still here.
Okay, perfect. Is that me, Brittany? Sounding like a transformer?
I think it's
Okay,
because
that's what I was
everybody's
talking
on
about.
mute.
Okay, my bad. I'm gonna mute all y'all real quick, okay? Just real quick. Mute all. Okay, hopefully that's better. So yes, that's a very great question. If you're new, the game, right, that I want you to play, what I want you to think of is I need to compound myself to a larger account, right? And not saying that you don't have a large account. I'm just saying when you're new, I don't want you going in heavy. I want you to learn the ropes, right? So yes, take profit at 30%, but I'm gonna ask you this. Let me remember your name because I'm gonna be watching you. Where are you at? Kelly? Kelly. Kelly, and anybody else who is with Kelly. When you're first trading, please walk away. And the reason why I say walk away is because there are a lot of temptations when it comes to trading. If you remain on the floor, and I'm telling you, when you're new, take profit at 30%, but then you hear us in there, oh man, we just went to 100%. You are going to be upset, and that FOMO is going to make you do irrational things. And it's all about harnessing your patience when it comes to trading. Okay. And your patience will eventually get you to that goal. But if you're in there trying to aim for 100%, and when you're a new trader or you're trying to compound your account, you could be holding on to something too long. And now you are allowing something that was a winner to become a loser. So get your 30% and go. I always tell them, like, tell the community, compound crew, 30%, that's you, walk away, bye, log off. Because there's a lot of temptation. Because who doesn't want to turn $30 into 300 or 300 into 3,000, right? But there is a rite of passage when it comes to trading. A lot of people who have been trading for a while are going to tell you, hey, I didn't have my aha moment until year two. Because I was in here trying to trade everything and I was exposing my account to so much risk. If y'all notice, I'd be like, I'm gonna help you to get into some trades. If I take a trade and it's a bad trade, if I take a trade and it's a good trade, if I take another trade and it's a good trade, I'm done for the day. I really don't want to be in that many trades because if you think about it, that means if I take 15 trades, if I trade every day, which I don't trade on Monday, but let's just say I did, if I took 15 trades a day, that's crazy, right? I don't really want to do that. But I have to be on here because I'm trying to cater to people who are on different sides of the world, right? But that's still a lot because every single time I open up a trade, every single time I get into something, I'm exposing my account to more risk. I don't like to do that. And I don't want you to do that. I want you to have discipline, learn how to walk away. It's not a casino. I promise you it's not. It's not a casino. There's money that you can make every single day in the market, but if you force it, you could be easily giving money back to the market. 30% and walk away, log out, go touch grass. You have a good day, go touch grass. You have a bad day, go touch grass, walk away. Lily went to 242%. Hey, Connie. One second. I got you. Let me find you. That was Kareem. Why did I say Connie? All right, y'all. You should be able to unmute.
I was gonna let you rock with the Connie, but it is Kareen.
It popped
AKA
up.
double M. I'm double M in the chat
Okay.
on the Discord. Okay, so you know how on Friday we opened with the gap down?
Yeah.
That's where I got stuck because I did my levels right. But then once the market gapped down, it was hard for me to like rechart. And I see sometimes you use the 2 day chart and then you flip over and check on the daily, the 4 hour, and then you start, getting your position in on the 5 and 15.
hmm
But I'm in week 2 of this and I'll show your videos. I'm having a green month so far. I did take a little bit of a loss, but that's just the name of the game. But
Yep.
when I'm charting and I'm trying to do your charting homework, I just be all types of lost.
No
So
problem. So I did say that I was going to go over that. So let me do this real quick because this is going to go off from what we're talking about. So I'm going to get everybody's attention real quick. Okay. All right. So y'all, I'm getting ready to do a little bit of time frame talk with you all, okay? This is why I be losing my voice. I'd be like, stick to the script, girl. So I'm gonna give them a moment. They ain't gonna have too long. So I've covered this topic before, but I know that sometimes it's easier to cover it when people are live because sometimes people don't want to go back and listen to recordings, and that's fair. I'm one of those people, so I can't judge. All right, so number one, time frames are going to, uh-oh, let me do this real quick. Do 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 do. Where is it? Where is it? Where is it? There we go. So number one, time frames are going to be a direct relation to how you plan to trade. I created this guide because I want people to have an understanding of time frames. And when I say have an understanding of time frames, what I mean is there's going to be instances where it's too much data, or there's going to be instances where there is too little data. So for example, if I told you that I want to be in a trade for a year, here we go. I'll start writing on my screen. If I told you that I wanted to be in a trade for a year, I want you to know that my macro time frame needs to surround the year, right? I need to go look at what the year looks like. And when I say my macro time frame, I'm basically saying the bigger picture. I need to step back and see what's happening around the year over year. Is it moving to the upside? Is it moving to the downside? I'm going to give you an example as well, but I want to help you to understand how you're going to read the sheet. Okay. So I'm going to pay attention to that. If you told me you want to swing and you want to hold for like a week, you want somebody that just want to be in for a few weeks or whatever, I'm going to say, okay, well, pay attention to how the stock is moving week over week. That's going to be your macro time frame. So obviously, if I'm guiding you this way, then if I told you I want to day trade, what do you think I'm going to say? Go look around the day. If I told you I want to scalp, what does scalping mean? You're in this thing from minutes to seconds. I want you to go to that maybe go around the hour, right? And figure out what's going on around that time frame. So I'm going to take you to the top of this. But before I do, I'm going to say time frames, again, are a way to break down data. Okay. And if I said, tell me what you did today, you might say, oh, I just stayed at home. But if I said, tell me what you did hour over hour, you're going to break down everything you did from the time you got out of bed to now. That's what time frames do. So with that being the case, every time frame has its respective macro time frame. If I'm day trading, my macro time frame is the day. If I'm swing trading for a month, my macro time frame is the month, right? So hopefully that makes sense. Every time frame, depending on how you trade, has a macro. Then you're going to have your actionable signal time frame. Your actionable signal time frame can, collide or also be your macro time frame. What I mean by that is your actionable signal time frame is literally signals to take action. Signals to take action would look like a candle that represents bearish or bullish, or a strat setup. What candles represent bearish or bullish? Y'all give me some examples in the chat. What are some bearish reversal candles and some bullish reversal candles? Give me that in the chat. Okay, hammer, perfect. Shooter, perfect. That's all y'all know. Gravestone. Doji is a candle of indecision unless you actually give it a title like a gravestone doji or a dragonfly doji. Hanging man, right? These candles mean something, right? Okay, cool. So these are candles to take actions or signals to take action, right? So actually, let me hold on real quick. Let me pull this up for those that may have not seen this. Want to be respectful of the new people too. All right, so can you guys see the candlestick sheet? Okay, cool. So for those of you who are new, when I say signals to take action or candles that represent signals to take action, I want you to visualize the word reversal over here, visualize the word reversal over here, bullish reversal, bearish reversal, keyword reversal. So if it's reversing bullishly, that means it was first going down in order for it to reverse bullishly, which means up. This was first going up. So in order for it to be a bearish reversal, it means it has to form in an uptrend in order for it to reverse down. This has to form in a downtrend in order for it to reverse up, right? That's how this works. These candles represent a bullish reversal. These candles all on this side represent a bearish reversal, right? Single patterns, double patterns, triple patterns, basically meaning it only takes one candle for this pattern to be true. It takes two candles. This takes three candles. That's what these things mean. So when you're on your time frames, we'll go back over here. Actionable signal, meaning, do you see any of these candles? Right? Because these are candles that say I'm signaling a potential action that's going to take place soon. Okay, cool. Now that you have that, and remember, you can find actionable signals on the macro too, okay? But I couldn't overlap the colors. Now that you have that, you're going to map it out on your macro or actionable time frame. Wherever you find your actionable signals, you're going to map it out. You're going to chart it out. The strat teaches us how to chart things out, right? Support and resistance teaches us what levels need to be broken to get in and out, right? So you're going to map it out. From there, you don't sit on these time frames and wait for the candles to break the levels. Why? Because if I found an actionable signal on the daily time frame, but I stayed on the day, it's going to take a whole day for that candle to close. The move has probably already happened. You might get a continuation the next day, but the move probably already happened. So if I found an actionable signal on the day or the 4 hour or the 1 hour, right? Because this is day trading. This is like your guide. I'm showing you how to view these. And that's why I color coded it yellow, orange, and blue. So yellow means, hey, this is your macro. Orange is your actionable signal. Blue is your entry. So if I found actionable signal on the day, right? Or the 4 hour or the 1 hour, because remember these colors you can find actionable signal on your macro. Then that means when it's time for me to get into the trade, I need to go from the 15-minute or lower. This is a guide. It's just trying to show you how to view time frames, okay? I broke it down to if you're someone who wants to be like in a trade for a quarter or a month or a week, I want you to look at it like this. So with that being the case, everyone, I'm going to go over to the 15-minute time frame, the 10-minute or the 5. And what I'm going to do from there is I'm going to wait for market structure. Market structure is higher highs, higher lows. That's an uptrend. Lower highs, lower lows. That's a downtrend. Or Strength and momentum. Strength and momentum looks like you don't see nothing but a bullish candle after a bullish candle after a bullish candle after a bullish candle if it's going up, or a bearish candle after a bearish candle after a bearish candle if it's going down. Okay. Now I'm going to go over to the chart because I want you to know there's two ways to do this. There is where you come to this sheet and you say, I just want to be a swing trader and I just want to look at the week only. Okay, well, then you can, all you're going to do is you're going to start from the week. You're going to step back and you're going to say, just like this. Let me actually take you to a chart so you can get the visual. All right, so if I'm on the weekly time frame, did I just chart this out? Yeah, I just charted this out for tomorrow. I'll do IWM. No, I'll do QQQ because I didn't chart that out. And then let's go, let's actually go to the day. You're gonna get the same example. You're just gonna do the same thing with time frames, right? We all see this beautiful, what is this candle, everybody? What do we see? And a fair value gap. Let me see what y'all saying. Okay, we got a hammer. What does a hammer tell us? What direction? What does a hammer say to us, right? I'm gonna give the new people some help. My OGs, y'all don't need help. Um, what does a hammer say to us? Where does a hammer fall? A hammer falls on the bullish side, right? The hammer falls on the bullish side. All right, perfect. Where did I find it at, y'all? Where did I find the hammer at? I found it on the day. Okay, cool. The strat says be prepared in either way, so I'll only get my call entry off of this. So now I gotta find my put entry. Let's go back over here. So call entry comes off of here. If I go over to the 4-hour time frame, I get put entry off of here. That put entry, that's an aggressively bullish. So that target, the magnitude is probably ain't gonna be that good, but I can also go down to the hour if the magnitude is horrible. Yeah, it is a trade setup for tomorrow. That's why I put it on the floor. I put SPX and SPY for the homework, so y'all can see that. So, anyways, let's just imagine this is any time frame, right? Well, I got so many drawings on this chart. Let's imagine that with QQQ. Let me make sure y'all can see my chart. Yeah, that's why I hate charting after hours. I told them that in my mentorship today because things could happen while you can do nothing about it. So. What I mean when I say the macro, this is what I would do on any of the respective time frames. Bring my chart in, get an idea of what's happening. Overall, it looks like the major trend is up, but here recently we kind of pulled down. So the macro is where I'm just saying what's happened. I'm getting an idea of what's happened. On the macro time frame, overall, we've been in a really nice channel. I can see a channel, right? We've been in a really nice channel. We've been trading within a channel. Okay, cool. So now I got an idea of what's taking place, and I want to talk to myself a little bit deeper. But on the daily time frame, there's a hammer. And the hammer is a bullish reversal candle. So we might try to pop up. We especially bounced off of this moving average. So we might try to pop up, right? Okay, cool. Now I've had that conversation with myself. And then remember when I said your macro time frame and your actionable signal time frame, they could coincide, like you could find an actionable signal on the macro. Well, I did. I found a hammer on the macro, which is respective to day trading. My entry comes here, right? So I'm going to chart this thing out. I'm going to go through the whole thing, chart it out, figure out my ATR, figure out what my strike prices should be. I'm going to go through all of that. Once I get done charting it out, once I find my call and my put entry, I'm going to find my put entry off the 1 hour because that magnitude from the 4 hour for puts is just trash. I'm going to find my magnitude like this. So call entry is 609.95, put entry is 607.07. But those levels do not tell me that's where I need to get in calls. Those levels tell me, hey, when my alert goes off, that's where I need to pay attention to see if it's building structure up or structure down. Okay. But when it's time for me to get into my trade, see how it's mapped out? And you see what I followed to map it out? I forgot to label that. You see what I followed to map it out? When I go over to this sheet again, I got so much stuff on my desktop. When I go over this sheet again, look at the process that I followed. Looked at the macro, got an idea. I also found actionable signal on the day. I went to the 4 hour. I have an actionable signal for puts on the 4 hour, but it's not going to pay me a lot because the magnitude from where it closed to the ATR is so far apart that it's going to pay me pennies. So I'm going to get an earlier entry off of the 1 hour. Okay. I did all of this work. I'm done with this. I ain't got to look at this no more unless I'm just navigating through the time frames as the day is going to see like, are we more on an uptrend overall in the day or whatever, right? But when it's time for me to get into my trade, I'm going as low as the 5 minute. Me personally, this is a guide. This can be altered based on your personal preference as a trader, okay? When it's time for me to get into the trade, all of this is done, right? I would have my ATR mapped out, my price targets, all that. When it's time for me to get in, I can go as low as the 5 minute. And what I'm looking for is market structure. When we say market structure, we're saying if it's an uptrend, uptrends look like this. You're going to have your first low, and then you're going to have your first high. And then you're going to have a higher low, basically meaning this low, it went this low, but it's higher than this one. So you're going to have a higher low. And then you're going to have a higher high, higher than this high. This is market structure to the upside. Okay. So if we're going to break to the upside, I want to see market structure. If I don't get market structure, I want to see strength and momentum. Strength and momentum looks like this. Uh-oh, give it to me. I didn't grab all of it, but anyways, strength and momentum looks like this. You see how it's just bullish candle after bullish candle after bullish candle after bullish candle. That's strength and momentum to the upside. Okay. If it were a downtrend, mother scruncher. Oh, QQQ. Don't do this to me. Anyways, I'm sure it was a faster way. But anyways, market structure, I'm sorry, strength and momentum down would look like this. You see how it just bearish, 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 bearish. That's a lot of strength and momentum. That means that the bears are just stepping up aggressively. So that's what I want. If we're breaking calls, I want to see this happening above here, or, as it's leading to that. If we're breaking down, I want to see it happening below here, or as we're leading to that level. That's what I want to see. So respect your time frames. So when I told you, you can either start on that sheet and say, I just want to swing trade and I'm just only going to look at these time frames and wait for these signals to present itself. You can do that. Or you can be like me sometimes. Sometimes I'm just like randomly like, let me go look at what the week have. Ooh, I found something on the week. That's swing trade worthy, right? Like with SPX, when I got y'all attention and I showed y'all that it had this beautiful, beautiful gravestone shooter hybrid that I was hoping that y'all would set alerts, do what you need to do. Like, I'm gonna teach you how to fish. I can't give you everything. I can help as much as I can, but I also want to teach you. When I got y'all attention, y'all were saying it's a shooter, it's a gravestone. And I'm thinking to myself, yay, they got it. And I'm like, why ain't nobody, you know what I'm saying? Like, why y'all didn't take your own trade? I also gave y'all homework the other day. I gave y'all homework, gave y'all steps, gave y'all everything. And I didn't even see any of you taking your own trade. Y'all did the homework, why do y'all think I told y'all to set the alerts? Pick your strike prices. I'm trying to help you to fish. Okay. So anyways, yeah, I'm taking y'all off of mute. That's all to unmute. Hopefully that helps because that was not a part of what we were here for today.
That
But
was very helpful. Thank
That
you.
was very, very
That was very helpful. Hey, can we look at the 2-week chart real quick since we're on QQQ? Since we are here,
I know that voice. That's my sidekick, y'all. Since we're
Mike.
here, yes.
look at that closed fail 2 up.
Let me see. I feel like I'm getting sick or I'm losing my voice. Yes. So I actually want to see. Oh, is it below the 50%? Hold on, wait. I just moved the wrong thing.
The tricky thing is, I think we bounced off the monthly open the
Um,
previous month.
well, it's actually more of a it's not it's giving dark cloud cover. It's hybrid of dark cloud cover because it technically is, but it's also giving what's that thing that I don't like to trade? Now I gotta go over here. Tweezer. It's almost tweezerish. Tweezerish. But either way, it falls on the bearish side of things. So with the 2 week time frame, your actionable signal is going to come so low. It's going to be like down here, and we're much higher than that right now. And the future currently bullish right now, so it may take a while, but I do see the failed 2 up, and it's a closed 2 week. So, but it's going to take a while for it to actually trigger that actionable signal. Make sense?
Mm-hmm.
Yeah. So it'll be like a waiting game because it is a dark cloud cover. I just looked at the math on it. It looks like it. Let me move my indicators down here. Move out the way, Zoom thingy. Dark cloud cover. I'm gonna use let's see. Because I just had the 50 60. Wait a minute. You told me to look at QQQ and I'm over here looking at SPX. Didn't you say QQQ?
I did.
Okay, same, right? Um, I still feel like it's dark cloud cover with tweezer energy. No, I didn't close that low. So no, it's not. It's more, but it is a bearish two up tweezer. So it could definitely give a rev, but it would be your entry wouldn't come until here.
Okay.
Yeah.
Do you see how the previous 2-week candle kind of gave like a bullish continuation off of the fail two?
Yeah.
That's what I'm kind of looking to see off of the month. Because if we look at where we're bouncing off of the month, we're
50%.
bouncing off of that previous September close.
Yeah. Yeah. That's where we bounced from here. Well, we kind of respected it. Yeah. Ever so slightly. It looks like we're almost holding or we're close to it. So we would have to like forward think about what we're trying to create. Back above 613.03 would be a key area.
Which is where I think we open tomorrow.
Yeah. Yeah, and then you have to think about this too. So if we're thinking about that possibility, then watch this. Like think about what we're creating, potentially negating, or what we're doing, right? So if we actually do have this hammer, right? If we do have this hammer and we do utilize this hammer and try to pull at least the close into here, and then we look at what the ATR tells us, the close is at 609.74. So now let's think about what we can create, negate, or do. So 609.74 plus that 9.29 puts it at 619.03.
You guys can't hear my dog in the back, can you?
No,
Okay, good.
619.03. So let's say we do that, right? 619.03. Then that would actually push it here. If the ATR pushes us to the upside, that will push us here. This is actually a target too, y'all, for tomorrow, even though we don't live trade on Monday. So that's a target right here. And so if you're thinking that on the month, we may end up here, which actually pushes us back above 613.03, which is the 50% of the previous month, which could actually push us here. If it pushes us here, this monthly candle starts to become even more of a hammerish. Does it make sense?
No, yeah. I'm thinking if we see the volume that we go two up because we
Yeah.
open so close to the two up on the month already. That's where the actual liquidity should sit, like,
Yeah.
for the orders.
Yeah. Hopefully y'all follow that. I'm too fast. Simon,
Thank you, Kay.
no
I
problem.
understand. Thank you.
No problem. SPS has a failed two on the day. Y'all, slow down on the explanation. Y'all didn't get what I was figuring out in advance. You want me to say it again? Yes, SPX. Did you see my homework, Kevin? There's homework. There's homework on SPX and SPY. I gave it to y'all earlier today. Simon been here way too long. Okay, cool. So you saw that hammer, that two down hammer. Okay, cool. So y'all saw that actionable signal. Let me give y'all this spreadsheet real quick. I think I can. Let me see. Uh, hmm. Maybe, how do I do that? Let me see. I think I could share it with you this way. I'm gonna share it with y'all because y'all came to class. I don't know if it's gonna let me do it. Export and send a copy. Export and send a copy. No, it's not letting me do it. It's letting me add it to a note. Mother scruncher. I'm gonna have to figure out how I can send this, y'all. I'm a little slow when it comes to some stuff, especially right now. My brain is fried. I'm gonna go through that one more time, Simon, and I'm gonna the heck. I'm gonna go through it only because this is how you have to forward think about what could happen, right? So what Mike was saying was that we look like we are bouncing off of the close of this month. So you see how this kind of wicked ever so slightly and then it pushed up? Okay, cool. What I said was, well, I was looking to see where we were in reference to the 50% of this particular month here. The other thing that I said was, I forget what Mike was saying, but I said, okay, he's thinking we might push up, right? So when I go over to the daily time frame gives us a hammer, which is a candle that represents a bullish reversal candle. And if that's the case, if my call entry is from the close of this plus the ATR, that's going to put us at 619.03. So if we push up to 619.03 and I go to the monthly candle, that means the monthly, where this close is sitting right here, it's going to push the current month up to like this. If the current month pushes up to like this, then that means the body of this candle changes, right? The body of this candle starts to look more like a monthly hammer because all of this below would be wick. And then this would be the current body of it, right? So just kind of getting the jump on what that candle could turn into. And it's still very early. It's only the 9th, right? But it inches it higher to potentially try to get it back above here or whatever. But I kind of feel that they're, and actually QQQ and SPX and all them are going to kind of look the same. But when it comes to SPY, y'all see that SPY is actually, or SPX, y'all see that it's in a channel. Let me go to the week. You'll probably see it a little bit better. You see how a channel looks like, it's sandwiching between two trend lines. So you see how we look like this, right? And then if I put the top, because I'm putting it in green because that's where we could bounce from. And then I'll put this, move out the way. I'll put this in red because that's where we could reject from. So you see how we're trading between that channel, put that in red. But then if we go to the day, we're currently outside of that channel. So now we're also thinking a little bit more about what we can create, negate, or do. This is a hammer candle. If we do decide to be bullish and take this bounce up, where is it going to put us back into, y'all? Where would it put us back into? The channel.
Back in the channel. We're gonna be back in the channel.
Back in the channel, right? And if we get back into the channel and we're like right here, then if we think again, I'm always going to keep saying this, y'all, so y'all can remember create, negate, or do. If we're back here, remember the bottom of the channel is an area that we can bounce from. So here is the opposite side, right? Because I don't want y'all to just be so convinced. The market is currently bullish because I see the numbers moving over here. But here's the other side of that, y'all. It could be a bounce into this fair value gap and then a rejection back down because this and this almost looks like it wants to cross. But if we do take this up, we could get back above the 9, which pushes us back bullish. That's a lot, I know, but I tried to say it in the best way that I could. Okay. Gotcha. 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 Okay. It made sense. Perfect. All right. Cool. Anyways, I hope you all enjoyed this class because that's all I got. My voice is leaving me. I'm tired. And I'm gonna watch some I don't know. I need something good to watch. I like to watch crime TV. So happy to help y'all. Very, very happy to help. Get on the live tomorrow. No, no, no. Oh, no, no, no. I'm gonna stop this. So now we finna be a family right now. So I'm finna stop the recording. We finna be a family right now. Let me stop this. Come on, give it to me.